Okay, just take note that this webinar is purely for educational purposes, does not take into account specific investment objectives, financial situation, or particular needs of any person. All right, moving along. Now, what's happening to markets right now? If you look fundamentally, of course, Donald Trump just officially became the president of the United States, and to me, the market is spookily is really quiet. This is the kind of complacency setting in. That's just my feeling. All right, it might be true, it might not be true, but later when I take you to the charts, right, you can see that you look at the S&P, for example, this very range bound. It broke a new high in December January period, and right now it just wants to move sideways. So just be a bit patient. Most of the indices are quite similar. So just be a bit patient with your trades. Now what I'm going to do from this week onwards is I'm going to do a quick recap of what I covered, or the markets I covered in the previous webinar. So my webinar is fortnightly, but the idea is not whether my analysis is wrong or right. It's more of the thought process behind it, what I mentioned, the levels that I talked about, and what was the outcome. So I thought by doing that, at least when you go back or when you watch the recording on the previous 2 weeks, you can see how to plan your trade and how to manage it and things like that. So I'm just going to do a quick review of what we covered 2 weeks ago. I think some of you were asking the Aussie Kiwi, as well as I think, what was that? Euro CAD. Okay, never mind. Let me cover the Aussie Kiwi first. Okay, so the last webinar was on 10 of January. Okay, 10 of January. And if you, let me just point out where 10 of January is. Okay, 10 of January is here, evening time. Okay, this whole area here is 10 of January. Now, during the webinar, I think one of you pointed out that there's a nice little breakout, and I agree. It was a really nice setup. If you zoom out a bit of the charts, you can see that is a pennant or wedge or whatever you call it. But you can see the first breakout was here, but the key resistance was around the 105. Okay, very clear resistance because of all these touches here, as well as the pennant. And when I was doing the webinar, there was a nice little breakout. Okay, there was a nice breakup to the upside. Now, what I mentioned on the last session is that I would like for it to pull back to around this level before I might consider entering buy positions. Okay, so my bias is bullish, and I'm looking to it to pull back to a good level of resistance turn support, so that I can manage my risks to the upside. So we did come back down here. It took about 3 days. Okay, Friday the 13th January. Okay, so all this time around when it was lingering up here, right, my trade plan was a bit, I was keen to wait it out and see what happens, because it looks kind of overextended. I think there was a bit of a divergence as well. And it came to my level around here. Okay, so this was a entry that you could have taken. Okay, a few levels here, a few times the candles came to these levels. And the stop loss was below this swing low here. Okay, let me delete some lines so that's confusing. Okay, the stop loss was below, let me just put, how do we put it? Okay, stop loss was here, see this line here? Below the swing. Okay, so what happened was that, yes, it pushed higher. Okay, it pushed higher. My initial target was at least back to the previous high, maybe around the 105.50 area. Okay, 105.50 area. Because on the heightened time frame, right, if you zoom out a bit, it looks good to go to the upside. In fact, the next level of resistance I was looking at is around the almost close to 105.80 to 106. Okay, it looks like a really nice bullish breakout. Entry came to my entry level, stop loss here, risk to reward, you're looking about 1:1.5, which is pretty decent. And yeah, good to go. But what happened after that was that when it came to these levels, right, let me just draw a circle here, okay? Now you can see that there are many touches, but the candles just seem to be unable to break the 105.40 level. Okay, and I think there was some news coming out or something like that. But what I did was that when I see this, I just jam my stop loss to break even. Okay, I moved my stop to the entry level. And of course, on hindsight, we all know what happened. The thing came down and it triggered the stop loss and I got up break even. Okay, so nothing gained, nothing lost in this trade. But it was really, I needed to wait 2 days for the entry to come, and when it came, I took it. It's just that it didn't manage to push all the way to the resistance level I was looking for. Okay, so that was Aussie Kiwi. The other one that who was it? Was it? Oh, hi Sunil. Yeah, 恭喜发财 to you. So, yeah, the other one I think was, yeah, it was you, Sunil. You were asking about EuroCAD, if I'm not wrong. Okay, let me see EuroCAD. I think it's EuroCAD. Give me a moment. Let me just have a look. Daily chart. Yeah, it was EuroCAD. Was it Euro Aussie? I can't even remember. So, do you remember which pair was it? EuroCAD, Euro Aussie? Ah, Euro Aussie. Yes, Euro Aussie. Okay. So basically, Euro Aussie. Now this is a weekly chart, right? Now the whole idea of Euro Aussie was that end of 2016, I was bearish. Alright, kind of swing trade, position trade, kind of bearish position because the key support of 104,400 was broken in November. Okay, but then I remember I was mentioning that the nature of how it rebounded. If you look at the number of touches here in terms of the candles, 1, 2, 3, 4, at least 6, 7 candles touches, and it looks really bottomish at around 1.4. And the bulls took control. How did I know the bulls took control after that? Is because of this big green candle here. You can call this a bullish engulfing candle, and the candle closed above the key support level that was initially broken at 144. Okay, so because of this candle, I sort of changed my bias. Okay, I was looking more towards the upside actually. And if you draw a resistance trend line, okay, you can see that it seems that it's broken above. So possible that the bulls have come in and want to push it higher. Okay, so this can call it a false breakout, I guess. So that was a weekly chart. It's really long term. I remember Sunil was telling me that he's bearish, but I say that the way the chart is moving, it might not be as bearish as anymore. Because if you look at the number of touches at the 14130 level, many level touches, triple bottom kind of pattern, and it broke higher. Now, where we were 2 weeks ago was that I was a bit more bullish than bearish just because of the nature of the price action. It broke above the consolidation pattern. It broke above the 144. And for me, as long as we stay above 144, right, the bulls might take control. But again, this is what happened. Okay, now the market is dynamic. You can plan one thing, but you need to be alert. You need to always understand where is your line on the sand. Okay, when I say line on the sand means that if the market breaks below this, then you should be bearish. If the market breaks above this, you should be bullish. Or if you don't know what's happening, you just take a step back and let it sort itself out. So for this case, 144 is line in the sand for me, Euro Aussie. When it broke above, I was slightly more bullish. But then what happened after my webinar was that it broke back below. Okay, and when we broke back below, you must be alert enough to tell yourself that, hey, maybe this area here, okay, this whole area here is a false breakout. Okay, and it's going to consolidate back down all the way to the support of around the 141 to 141.30 area, and this is exactly what it did. Again, I know hindsight is easier said than done, but the reason why I want to review what I covered 2 weeks ago is, again, I want you to understand my thought process and how to be flexible in terms of trading. Okay, you can't have a one direction mindset. You need to be fast. You need to be alert. What's the market doing? What's your key level and things like that. So when you broke below 144, okay, it made me think that this is more or less a false breakout. Okay, I didn't take any trade, but this false breakout led me to think that it is still in the one big fat consolidation, and it's coming back to the support, which it did. Okay, now right now where we are still bouncing off the support. Okay, now would I take a trade back to the resistance? Probably not, because it's a bit too far from this zone area already. Okay, but would I short it? No as well. Okay, unless this key 141 is taken out again, then I might entertain shorts. Okay, but right now it's just consolidating between this huge 141.30 level to 145 or so. Okay, just playing this consolidation level. Okay, just thought I covered. I'm not sure any of you were here 2 weeks ago. If anything you want me to review, feel free to shout it out. Okay, the whole objective of such webinars, live market analysis, is not trying to predict the markets. It's more of understanding how to plan a trade, what to look out for, and yeah, Bimal. Bimal was saying it seems range bound now. May do short term buy till it reaches to resistance. When you say short term means what time frame? Because this is a daily time frame, so it's a bit longer term. If you're talking about short term, right, like the 4-hour chart and things like that, it actually seems a bit more bearish. Okay, short term, yeah, but you just need to know the key support and resistance levels. All right. Daily chart. Oh, I see. Yeah, I mean daily chart. Okay, if you're going to trade this consolidation pattern, right? Okay, you just need to make sure that your risk to reward is good enough for you. That means that I'll say the most ideal stop would be below this candle. Okay, actually, this was actually quite a tricky move. I'm not sure whether it's caused by news or what, but basically, it actually went lower than the previous support touches at 141. Okay, but the thing just bounced back up. If you want to be a bit more conservative, right? That means you want to you want to have a tighter stop loss. I would say that this looks a bit like an inverse head and shoulders at the support level. If you want to buy up and target the resistance 145 as a consolidation kind of trade, your stop loss can, I guess, be below this shoulder area of 141 or so. Okay, because if it breaks below 141, then most probably the bears are taking control. Okay, Bimal? Yeah, but that's I mean, it's a decent trip, man. Why not? Just take note. Yeah, 1 to 2. Okay, so moving along, let me go back to what I do normally. I'll cover indices first, and then I'll move on to FX. But again, anytime you want me to cover what I covered the previous weeks, doesn't matter if it's 2 weeks ago, or even 1 month ago, or hell, even 2 months ago. I mean, the main thing again is the thought process and understanding how to plan a trade. Okay, so let me go to my usual indices first. Let's go to the S&P 500. So if you look at S&P, look at that. It's just mess. Okay, I'm not really looking at most of the indices right now. I'm more keen towards FX. Later I'll highlight what FX pairs I'm looking at. But if you look at the weekly chart, just to have a big overview, okay, you can see that yeah, it's stuck in an ascending channel. Okay, but you look at the past 1, 2, 3, 4, 5, 6, 7, 8 weeks of sideways movement, doing nothing. I was quite surprised actually. I thought there'd be some fireworks during the Trump inauguration, but the I mean, it's just volatility is still very low. Okay, I mean, last year was a different story altogether. Do you guys remember what happened in January last year? Last year in January, China stole the show. Okay, because they were talking about circuit breakers. You know, the markets dropped. I think it was spurred by oil or something like that, but the market dropped quite a bit. Triggered circuit breakers, and then the regulation head decided to remove the circuit breakers, and the thing dropped further. So big hoo-ha last year January. This year is a bit different. I mean, I don't know what's happening. It's just the way the market is. All right. I mean, as price action traders, we follow the charts, but just be a bit more patient, I would say. But if you look at the weekly chart, the S&P 500 is stuck in a channel consolidation. If you go down to daily chart, you can see that this 2280 level is looking like a really good resistance. All right, but for the past few days, if you look, the price, I mean, bulls and bears are just fighting out between 2250 and 2280. This 30-point range. I mean, if you're a short-term trader, kind of intraday kind of trader, you might just want to trade the range. If not, better to just stay on the sidelines. Okay, and there's not much to plan. It's quite a simple trade plan actually. Look out for 2250. Look out for 2280. If it breaks 2250, high chance we might come back down to the 2230 area. Okay, because if I zoom out, you see this trend line I drew here? So if we broke 2250, high chance it might consolidate back down to here. Okay, but if it breaks 2280, okay, my next target will be 2300. 2300. Okay, I'm a bit more skeptical if it breaks higher. So if you're going to follow the bulls and take it up, okay, you'll be very alert because number one, 2300 is a psychological resistance. I mean, if you look at the S&P, it has gone up so high that there's no resistance in the past to measure it from. So I'm just using whole numbers, not rocket science, right? So 2300 is a key level you look out for if it breaks above 2280. But just be careful if we are bullish because if you look at the MACD, you can see a bit of bearish divergence. In fact, this bearish divergence was here 2 weeks ago when I was talking about S&P as well. Okay, because you can see that the MACD is making lower highs, but the price is it made slight high. Okay, in fact, it's double, triple bottom, triple top. Sorry. So just be a bit mindful here. But if you break 2250, then next level you're looking at is around 2230 also. Okay, simple trade plan for S&P. Just consolidating. Just be patient. Quite similar for the other US indices. Okay, if you look at Wall Street cash, okay, you can see that consolidation up, down, up, down. I mean, for those who are alert enough, you can trade at the range. Okay, if not, just be patient. Same thing, same story for the Wall Street, Dow Jones. All right, let me move on to the other markets. Let's go to the DAX. Okay, you guys got any questions, please Type in the question box. Oh, Sunil, are you talking about the Euro Aussie trade that you mentioned 2 weeks ago? Yeah, I already started on Indices though. Is it okay if you just hang around for the second half and then I'll cover Euro Aussie again? Yeah, but basically I remember that you brought out Euro Aussie, which is why I want to cover it again. I was hoping, I was looking at the charts and I was planning to play some trades, and when it broke below that support, right, I was thinking in my head, I hope Sunil wasn't caught on the upside. Yep, okay, so I'll cover that again, not to worry. But let's move on to the other indices, DAX. Okay, DAX, same story. Most of the indices, right, especially in the Western world, like the DAX, the US, just trap sideways pattern. Something's got to give. Just be patient, okay? Don't force trades. On the weekly chart on the DAX, it looks very bullish, nice and bullish. If you look at the resistance level, it's around the, I'll say 12,000 would be a nice level to aim at. Okay, but just that right now it's been lingering around the resistance of 11,006 or 11,005. Sorry, 11,006 or so. Might be due a pullback. But weekly chart looks good to the upside. If you look at daily chart, pretty sideways. Okay, it's basically ranging between 11.4 and 11.650 or so. All right. If I go to 4-hour chart, okay, you can see here. Within this whole range, right, if you're intraday trader, like I said, you can actually pick the support and resistance to try to trade it off from. Okay, sometimes you might get stopped up because the support has been breached or the resistance has been breached, like this here, okay, or even here. These levels here are a bit tricky, okay, because it breached the level. Because if you look at intraday basis, right, you are trading between the 11,530 and 11,630 level. Okay, so it's up, down, up, down, down, and some of it you might get stopped up. Okay, but if you're trading short-term trades like that, very, very important, you need to manage your risk properly. Okay, I never understand why some traders like to trade off support and resistance. Okay, but when the trade goes against them, they just keep it. It doesn't make sense because your risk to reward will become negative. Okay, of course, on hindsight, it seemed easy, but even if you have taken these trades and you have been stopped out, and you see that the market moved back in again and back towards the resistance, okay, you should be alert enough to take the trade again. Okay, one trade does not define you. If one trade defines you, then most probably you're risking too much, over leveraging, being emotionally attached, and all those things. Okay, so when you're trading intraday kind of support and resistance play just in and out, you got to be very careful of your psychology. Okay, because sometimes when you get stopped out, if the pattern still shows itself, just take the trade. Okay, that's why I say in trading, psychology is the most important factor of all. Okay, so we might whether how long we'll continue in this range, I don't know, but based on price action, it seems still very sideways. Okay, this 11,520 area and 11,650 area still sideways. Okay, if it breaks out above the 11,650, okay, high chance we'll go to 11.8 and then 12,000. But if you want to look at the support, if it breaks the 11,530 clearly, we might move to the next level support all the way to 11,004. Okay, that's it. This is just sideways trading. There's really nothing much to analyze. This is if you just draw your lines, you know support resistance is really not that difficult. It's just the way you manage the psychology. Okay, so just be mindful of these levels for the DAX. What's next? Let's see. Let's go to Nikkei. Okay, I'll try to cover as many time frames as possible so that I can satisfy the different type of traders that's in this webinar, from your scalpers, your longer term people. But you need to ask questions. If you don't ask questions, I don't know what you're looking for. And then the webinar get very boring just listening to my voice. So this is the Nikkei. Okay, so Nikkei is bullish. Right now, there's a potential bullish flag formation forming. You can see the support trend line that I drew, and you can draw some kind of resistance trend line, something like that. Okay. Now, key thing to note: daily chart, okay, is bullish. Is consolidating some kind of flag formation. So just be mindful of the support levels that you might bounce off. Now, what I'm looking at is basically the support level around here. It can be anywhere between 18,005 to 18,650 or so. Okay, for the bullish flag pattern to continue. If you go to your 4-hour chart, okay, this is what I'm looking at. Now, if you look at the 4-hour chart, it's actually in a downtrend, because look at this low. This low was taken out. Let me delete some lines first, sorry. This low here was actually taken out by this swing low. And right now we are at the lower high, back to the resistance level. Look at this. Okay, I hope there's not too many lines for you. But if you look at this level here, support, support, resistance, and potential resistance. Okay, so the trade plan for Nikkei is, key level to look out for is this level here, around the 18,009 or so. Now, for me, the 4 hours seems bearish because the lower low just broken. What I plan to do is this level here, about 18,009. Okay, see whether the bears will come in, and then we can take it down back to the support level here. And then once it's back to the support level here, around 18,005, 18,006, then the daily chart will come in, and most probably you can look for longs here to try to buy up. Because if you look at the daily chart again, this seems like a bullish flag continuation pattern. Okay, and if it's supported around 18.5, 18.6, and we manage to find bulls, the next few weeks we might start riding up all the way to back to the previous high, at least to 19.5 or so. Okay, that's a short and long-term plan for the Nikkei. Yep. Let's go to the Hang Seng. All right, looking at Hang Seng, if you go to the weekly chart, nice and bullish, supported by this trend line. Okay. Now again, Hang Seng weekly chart, right? One of the seminars I did for the Age newspaper was that I drew this trend line here. See this? And I was saying that if the 22,000 level broke convincingly, then it might stay bearish for the next couple of months. What happened was that it did break. Okay, it did break downwards, but then this reversal, okay, has made me take a step back and say that maybe it's not as bearish as it is. Okay, so I'm a bit more patient. Because if you look at the weekly chart, right, it seems bearish. It seems really bearish when it broke 22,000. 22,000 was which level? Was here. Somewhere here. Yep. So when it broke below, right, it seems really bearish. But then the whole thing just reversed. So you might get stopped out if you try to short for a longer term kind of thing. But then you got to take a step back right now and just let it play itself out. Okay, right now the Hang Seng is a bit mixed, especially for the longer term charts, the weekly chart. Which is why, again, I say trading is very dynamic. The markets are dynamic. The markets are random. You need to be able to read the charts and read the sentiment and be flexible. All right, do not be emotionally attached to the trades. If you notice, I started doing seminars, webinars for the past 4, 5, or maybe 5, 6 years. And this past year or so, I'm focusing a lot more on psychology rather than just talking about technical analysis, because I come to a point in my trading whereby I truly believe that psychology is the biggest thing in trading. Okay, so you need to be flexible in terms of analyzing the market. Okay, which is why I'm not a big fan of yearly outlooks and market predictions. I mean, what's the point of predicting the markets? Okay, unless you're an investor or things like that, then maybe you can use some fundamentals to guide your prediction if you're a long-term investor. But if you're a trader, from intraday to swing, or even position trader, right? I find it so much easier. Just follow the sentiment, follow the charts. And if you're wrong, get out. If you're right, get in. That's it. Okay, so things like that, okay, when I get it wrong, I must be quick enough to eat humble pie and say that, okay, I'm wrong, get out, and see what happens. Either I get in again, or I take a step back and let it play itself out. Okay, so you need to have that kind of mindset as a trader. You cannot be sucked in by any one trade, whether it's a win or loss. Yeah, so there's a weekly chart for you. Now, if we go to the daily chart, okay, you can see that this is almost like a V-shaped reversal. But right now, we are entering resistance area around the 23,200 or so. Okay, so I have no bias for the Hang Seng right now. Okay, I know this is resistance, but the way the bulls are taking charge, in terms of swing to position, I have no direction. In terms of shorter term kind of time frame, okay, there might be a trade plan in the horizon, intraday kind of thing. So you can see that this is a 4-hour chart. Okay, mind the lines, yeah. But you can see it's a 4-hour chart, okay, supported by this trend line. Okay, key support for me is here around the 22,800. Okay, 22,800. Let me just darken this for you. Okay, this level here. Now, intraday trade plan is that if this level is broken, 22,850 or so, okay, chances are it might come back to support around 22,700. Okay, this is more of an intraday trade plan. If you go into the 1-hour chart, you can see there's a bit more sideways. Okay, but if you zoom out, you can see that this trend line with this support around the 22,850 seems to be a quite good support level. If broken, high chance at the best might push it down 22.7 or so. Okay, that's more for intraday perspective. But if you look at the daily, weekly, there's not much. I don't have much of bias. Just the way the nature is bounced off, I'll be a bit more careful. Be a bit more careful. Okay. Let's see. So that's the Hang Seng for you. Okay. Any other questions on indices before I move on to FX? Eurodollar, yeah, I'll cover FX after this. Alright, if there's no other questions for indices, I'll move on to FX right now. Alright, I can take a 10-second pause as usual.